Hello, in this video I am covering the state of the cryptocurrency market. The total market cap for all cryptocurrencies is 439 billion. Bitcoin is at 159 billion, which is $9,300. Also of note is EOS, which I was suggesting might be a good buy down at around $5, and recently you would have tripled your money. It was as high as 20 about a couple weeks ago. So looking at the whole market, really, we want to analyze the whole market by looking at Bitcoin. So looking at a Bitcoin chart here, we see the high back in December of 20,000 and then the drop down to 6,000. When it dropped down to 6,000, I made a video down there explaining that I expected we're near the bottom and that I also expected a rally somewhere about half the previous high, which is about 10 to 12,000. That rally did occur. And then I also said in that video that there would be a pullback. That pullback has also occurred. Now, from that pullback, it found a level of support and it's been rallying higher. It's touched about 10,000. I personally expect the recent 10,000 to be the top of cryptocurrency, of Bitcoin and cryptocurrency in general. Maybe a few projects will still rally, but really I think the rally for now is over. And I would expect a retest of something like 6,000 again, or possibly 8,000. So somewhere 6,000 to 8,000 is where I expect the bottom to be. And what the market needs to do, what it's doing, is it's finding a level of stabilized support for a long-term push higher. That stabilization could happen at 8,000. You know, if it finds stability at 8,000, this could be the new bull market. Could be the beginning of a new bull market in cryptocurrency. However, that 8,000 level does not have to hold, and we could find ourselves back down to 6,000, and it could form a more long-term bottom like it did in 2015. So if we go out a ways here and we go back in time, we will see that we had this longer level bottom down here. And that was the stabilization level that played out over most of a year before Bitcoin was willing to rally higher. But it's interesting to note that the immediate crash had levels that hit down that far. So the immediate crash levels were the stabilization levels for Bitcoin. And I would expect the same sort of behavior going forward, given that the cryptocurrency market has value. You know, it certainly can be temporarily overpriced, but it presently has value, and that value actually increases over time as more people use their systems. So I do not believe the cryptocurrency bubble is over, just like I wouldn't believe the internet bubble was over in 1996. You know, the internet bubble was just beginning in 1996. With the recent rally and crash that we had, maybe we could say the cryptocurrency bubble has reached its first major leg in the bubble. But bubbles usually have multiple stages. The reason cryptocurrency can rally this far, this fast, this ridiculous amount of like 2,000 up to 20,000 at 10x, the reason it can rally that fast is because the bubble's not over. You see, you get a rally that fast, and it's caused by a huge amount of investment relative to the total market cap of cryptocurrency. And the cryptocurrency market's so very small that when that huge investment occurs, it creates a huge bubble. But that investment occurs not because the bubble's over, but because it's just beginning. See, a truly mature market is going to have this pervasive bubble that's quite large. It has to be a larger bubble than just 500 billion market cap. That kind of bubble is too small for something so revolutionary. So on that note, Warren Buffett says, Bitcoin is rat poison squared. So he's like negative against Bitcoin. His quote is, Bitcoin itself, or cryptocurrency, maybe in general, is creating nothing. When you buy non-productive assets, all you're counting on is the next person is going to pay you more because they're even more excited about another person coming along. So that is fundamentally the correct perspective. That's why I invest in cryptocurrency. But his attitude about it's wrong because he lacks understanding about the total market. So, when you have a productive asset, that would be like a corporation. You own a corporation. It produces revenue from a business model, right? So it's a revenue producing asset. Generally, those are better. Like 9 times out of 10, that's going to be better, okay? That is, unless you have a new type of asset where the future demand of that asset is going to be so huge that even though it's a non-productive asset, the future buyers and marketplace for that asset will be so massively larger than it is presently that you're certain there's going to be more buyers in the future. That's where he's wrong. So he thinks it's negative because why would anybody buy it? But there's multiple reasons to use it. There's multiple reasons already implemented where we have use cases for this for large financial markets. So it's incorrect to just, throw it under the bus and say, well, it's a non-revenue producing asset. Well, okay. But, gold was a non-revenue producing asset as well. But gold still holds value. It's not that gold is a good investment under any time frame, but it holds value. Cryptocurrency will always hold value, even if it's a non-revenue producing asset. The other fundamental mistake he's making here is he doesn't understand cryptocurrency, because there are cryptocurrencies that are revenue producing assets anymore. Like TenX, it's not legal in the US because it's effectively a security, but it's a revenue producing asset. So when you have fully corporatized security assets or partially corporatized security assets trading in cryptocurrency, and they pay something like a dividend based on a revenue model, they're effectively a new way to organize corporations. So what we're investing in some ways, by investing in Bitcoin, you're investing in a currency which will be used internationally for corporate international cryptocurrency assets. So if you don't understand that, the idea is these sort of international corporations that will arise, like something like TenX and other entities, which have revenue models and they're producing income. What are they going to pay their investors in? They're going to pay them probably in a token for their system. But how are you going to trade that token into cash? You're going to trade it probably through Bitcoin. I mean, if it's a very big enterprise, maybe somebody will do a cash to, 10x trade or whatever it is in the future. But you're probably going to trade that through Bitcoin or some other major currency, right? And if you do that, then effectively these cryptocurrencies have to have value. They will have value. And the larger that market for corporate entities becomes internationally, which we're seeing that trend play out, there's more and more of those kind of projects in creation, then the higher the value of the cryptocurrencies, which are the in-between trade vehicles for doing this. And that's just one use case. That's just one very simple use case. Ripple is another great use case. It's basically going to be a banking reserve currency for all the major Japanese banks. Okay, a major reserve currency for the major Japanese banks will have a value associated with it. You can't always predict what that value will be, but we can surmise that there will be more holders and users of that currency in the future than there is today. So if there's more holders and users of that currency than there is today, then the value goes up. So in a way, cryptocurrency is way easier to predict than it is the stock market. I can do stock market analysis. It's a pain in the neck. When you invest in a large company, you have all these moving components, you have all this uncertainty. There could be some hidden lawsuit out there that could bring the whole company down. You don't know what you're buying when you buy a stock. When you buy a cryptocurrency, it's so simple, you pretty much know what you're buying. And all you have to figure out is, will there be more users in the future? And if you figure that out, then you know the answer. It'll go up. It has to. Supply and demand demands that it goes up. So I like cryptocurrency personally to invest and trade in because the gains are higher, so you can make thousands of percents in a year, which I have done. And you can't do that in the stock market usually unless you get into junk stocks. Only junk stocks do that in the stock market. So there's a reliable basis to invest in cryptocurrency where you really have less of that in the stock market. There were certain situations in the stock market I was willing to put money to work, but most of the cases I just didn't like. And often in the past, I would have poor performance within the year. And it's just how the stock market works. So I agree with Warren Buffett on a very long-term basis. If we analyze cryptocurrency over the next 100 years, for example, it might be a very poor performing asset relative to corporate equities. However, many corporate equities in the future will exist on the blockchain on international cryptocurrency markets. Those, along with traditional equities, probably would outperform something like Bitcoin over like a 100-year span going forward. But over like a 5-year span, I kind of doubt they will outperform cryptocurrency because cryptocurrency is the new technology and the traditional stock market is old technology. So they do things the old way, and now we've invented a new way to do things, a new way to conduct business even, a new way for corporations to exist, and that new way has advantages that the old way can never surpass. So if you have new advantages in business that the old mechanism simply does not allow for, then you have an innovation. And that's where you should invest. You should invest with innovation that's going to play out in the future. Now, when you're 90 some years old or however old Warren Buffett is, your perspective is locked in a time period like 50 years ago. And he's, 9 out of 10 people get their perspective locked. And when you lock your perspective, you're incapable of seeing innovation. You're just no longer capable of it. And that's why he farms out his innovation to his younger people that work for him, and they make all his investing decisions, and he's just kind of a figurehead these days. So I wouldn't trust what he says there. And furthermore, if you look at how he became so wealthy, really he had one trade that he did that was successful. And that one trade basically propelled him into being the richest man in the world. So also I would say, if you have ever heard of George Soros made all his money shorting the British pound. He did not invest in a revenue producing asset, right? He just did a trade because he knew it would work, right? He had some insight that it would be a good trade. He did it. It worked. He made his money. That's what cryptocurrency is. And if you know it'll work and you know you'll make money, then for me at least, that's the place to invest. And it's worked super well so far. Like, I'm completely in the positive on everything. So like I can't even lose money at this point. Like, I can't lose money because I've already recouped far beyond what I'll ever lose. So to me, it's just a good way to invest. If you understand it. If you don't understand it, don't invest in it. So I hope you enjoyed this video. Thank you for watching. Bye.